Hey everyone, and welcome back to the deep dive.
We're glad to be back.
Yeah, this is going to be a really interesting one, I think, today.
Absolutely.
We're going to be diving into the world of the stock market,
Ooh, yeah, the stock market.
trying to help all you listeners out there make some money.
Make those money moves.
Exactly. So this deep dive is going to be based on an episode of the Money Moves podcast,
Stock market edition.
right? The stock market edition.
That's the one.
And our mission is really to help you guys understand the basics of the stock market,
The fundamentals. Yeah.
how to get started investing,
Yes.
and maybe even some related side hustles that you can get into.
Oh, yeah, definitely.
And then, of course, we want to help you avoid some of those common mistakes that beginners often make.
Yeah, absolutely. Those pitfalls.
So before we get too far into it, let's kind of just set the stage here and talk about like what the stock market actually is.
Yeah, for sure.
You know, for someone who's never really like dipped their toes in.
Right. So imagine your favorite local coffee shop wants to expand and open a second location.
Okay.
They need some cash to do that, right?
Right.
They could take out a loan from a bank. But another option is to sell a tiny piece of their business to people like you and me.
Okay, so they're offering shares.
Exactly. They're offering shares. And when you buy those shares,
You become a part owner.
you become a part owner in the coffee shop.
Okay.
And now you're invested in their success.
So when we buy stocks in like a big public company,
It's the same concept.
it's kind of the same thing.
You're giving them money to help them grow, and in return, you get a piece of ownership.
So then how does like making money work?
Well, when the company performs well,
Uh-huh.
like they release a hot new product,
Okay.
expand into new markets,
Okay.
their profits go up, the value of the company increases,
Right.
and as a shareholder, you benefit from that.
Because the stock price goes up?
Precisely, the stock price goes up.
Okay.
But of course, the opposite is also true.
Yeah.
If the company struggles, maybe they make some bad decisions,
Okay.
or their industry gets disrupted, the stock price can go down.
Right.
So it's not without risk.
Yeah. So your money's not guaranteed to grow?
Definitely not. It's important to remember that investing in the stock market always carries some level of risk.
Okay, well, the Money Moves episode, they had a really interesting example of this with Apple.
Oh, yeah. Apple, a classic example.
They said that if you invested just $1,000 in Apple stock back in 2003,
Back when they were just starting to get really big.
it would be worth over $500,000 today.
Yeah, it's insane, right?
That's why.
Power of long-term investing.
What do you think has been the biggest driver of that growth?
I mean, Apple's just been incredibly innovative, right?
Yeah.
They've constantly released new products that people love.
The iPod, the iPhone, the iPad.
Exactly. They've created this really strong brand loyalty,
Yeah.
and they've managed to dominate key market segments like smartphones and computers.
It's not just luck.
No, not at all. It's a combination of factors.
The Money Moves people, they also talked about Blockbuster.
Oh, yeah, Blockbuster, a cautionary tale.
They were huge in the 90s and early 2000s.
Everyone was renting VHS tapes and DVDs from Blockbuster.
Right. But they failed to adapt to the shift to digital streaming.
They missed the boat big time.
And Netflix was there to capitalize on that change.
Exactly. Netflix embraced the new technology.
Wow.
They innovated, and now they're the streaming giant.
And Blockbuster is basically a distant memory.
Yeah, pretty much.
So for our listeners out there, what's the big lesson to learn from this comparison between Apple and Blockbuster?
It's not just about picking companies.
Okay.
It's about understanding the bigger picture.
Uh-huh.
Is the company positioned to thrive in the future?
Are they keeping up with the times?
Exactly. Are they adapting to new technologies and consumer behavior?
That's a really good point.
Yeah, wise investing requires that kind of forward thinking.
So I think a lot of people listening right now might be thinking, okay, this all sounds great, but I don't have thousands of dollars to throw around in the stock market.
Right. It can seem intimidating.
Yeah.
But the truth is you don't need a ton of money to get started.
Really?
Yeah. Nowadays, there are all these apps like Robinhood Zero to Upstocks
Okay.
that let you buy fractions of shares.
So you can invest with just a little bit of money.
Exactly. In some cases, you can start with as little as $10.
$10.
Yeah.
That's pretty accessible.
Definitely the barrier to entry is much lower now.
That's amazing.
Yeah,
But then there's like thousands of different stocks to choose from.
that's true. It can be overwhelming.
Where do you even begin?
For beginners, I always recommend starting with index funds.
Index funds.
Yeah.
What are those?
It's like buying a little piece of a whole bunch of companies all at once,
Okay.
like the S&P 500, for example.
What's that?
It's an index that tracks the performance of 500 of the largest publicly traded companies in the U.S.
So instead of picking individual stocks.
Right. You're diversifying your investment across a broad range of companies.
Okay, so it's kind of like spreading the risks.
Exactly. You're not putting all your eggs in one basket.
That makes sense.
And historically, the S&P 500 has had an average annual return of around 10%.
10%?
Yeah.
Is that good?
That's pretty solid, especially over the long term.
But the money moves people. They also talked about something called compounding.
Oh, yeah. Compounding is like magic.
What is that?
Imagine you invest just $100 every month
Okay.
over 20 years with an average return of 10%. You could potentially end up with over $70,000.
Wow, really?
Yeah, it's the power of your money making more money, and then that money making even more money.
So the earlier you start, the better.
Absolutely. Time is your best friend when it comes to investing.
So we've talked about how to get started.
Yeah.
What about those side hustles you mentioned earlier?
Oh, yeah. There are some cool ways to leverage your stock market knowledge to make some extra cash.
Like,
Well, the most obvious one is stock trading itself.
okay, buy low, sell high.
Exactly, but it's not as easy as it sounds.
Yeah, I bet.
It takes a lot of skill research and a good understanding of the market.
So you can't just jump in and expect to get rich quick.
Definitely not. There's a lot of risk involved.
Okay, what else?
Another interesting avenue is content creation.
Content creation.
Yeah, if you're good at explaining complex financial stuff, you could start a blog, a YouTube channel, even a podcast.
About investing.
Exactly. There's a huge demand for clear, reliable information about the stock market.
People always want to learn about money.
Exactly. And if you can present that information in an engaging and accessible way, you can build a big audience.
And make money from ads and stuff.
Yeah, exactly.
That's pretty cool.
And then there's freelancing.
Freelancing?
Yeah, a lot of traders and investment firms need help with things like research data analysis.
Okay.
Even creating presentations or building trading algorithms.
So if you have those skills,
you can offer your services as a freelancer.
that's a good idea.
Yeah, it's a way to get involved in the market without actually investing your own money.
The Money Moves episode also talked about dividend stocks.
Oh, yeah, dividend stocks, those are great for passive income.
What are they?
Some companies, they pay their shareholders a portion of their profits on a regular basis.
Really?
Yeah, it's called a dividend.
Who you get paid just for owning the stock.
Exactly.
That's awesome.
Yeah, it's a nice way to earn some extra money without having to actively buy and sell stocks.
So we've covered a lot of ground here, but I think it's important to talk about some of the common mistakes that people make when they first start investing.
Absolutely. We don't want you to fall into those traps.
So what's the biggest one?
The money moves. People, they warned against investing based on hype.
Hype?
Yeah, just because everyone's talking about a particular stock or cryptocurrency doesn't mean it's a good investment.
Like that whole Dogecoin thing back in 2021?
Yeah, a lot of people got caught up in that frenzy.
It lost a lot of money.
Exactly. It's important to remember that there needs to be a solid underlying value and a viable business model.
So don't just follow the crowd.
Definitely not do your own research.
What's that called again?
Due diligence.
Right. Due diligence.
Don't just take someone else's word for it.
Even if it's a financial guru or something?
Especially if it's a financial guru.
Okay.
Take the time to understand the company, what they do, how they make money, their financial health, who their competitors are.
It's like buying a car?
Exactly. You wouldn't buy a car without doing some research.
Or a house.
Or a house.
Yeah, you got to do your homework.
Absolutely.
What's another common mistake?
Panic selling.
Panic selling.
Yeah, the stock market goes up and down.
It's volatile.
Exactly. And when it goes down, some people freak out and sell all their investments.
But that locks in your losses.
Exactly. You're selling at a low point.
So what should you do instead?
If you believe in the companies you've invested in, the best thing to do is often to just ride out the storm.
Be patient.
Exactly. Patience is key in the stock market.
So to wrap things up here for our listeners,
Yeah.
we've taken a pretty deep dive into the world of the stock market today.
We've covered a lot of ground.
Inspired by that Money Moves episode.
It was a good one.
And we've seen that investing in the stock market is really about investing in businesses.
And participating in their growth.
You don't need to be a millionaire to get started.
Nope, not anymore.
There are ways to start small and build your portfolio over time.
And there are even some cool side hustles you can explore.
But it's crucial to avoid those common pitfalls.
Like hype.
Lack of research.
And panic selling.
Exactly.
Yeah.
So here's a final thought for you all.
Okay.
As you think about your own financial journey,
Yeah.
what specific companies or investment strategies pique your interest?
What are you curious about?
What further questions do you have about navigating the stock market?
It's a journey of continuous learning.
Keep exploring, keep learning, and hopefully this deep dive has given you a good starting point.
To building your wealth.
Exactly. And as always, thanks for listening.
Of course. See you next time.
Let's pay.